12 funds. That is what is left after we put Australia's managed funds through 2 independent rating houses and then kept only the best performers. Not our 12. We did not pick a single one of them. And one fund cleared both gates and got thrown out anyway. We will tell you why. These are managed funds, which is what Australians call mutual funds. Actively managed, bought from the fund manager. No index funds, no exchange-traded funds, and no superannuation, which is Australia's compulsory retirement system. Here is the gauntlet. Gate 1 is FE Fundinfo. It awards 5 crowns to the top 10% of the funds it rates, scored on excess return, volatility, and how consistently a fund beats its benchmark. Gate 2 is Morningstar. It gives 5 stars to the top 10% of a fund's category, scored on risk-adjusted returns against its peers. 2 separate firms. 2 different methods, both keeping only the top 10%. Australia has 484 funds carrying 5 stars from Morningstar. That sounds like a lot. In the 4 categories we cover, only 41 of them also held 5 crowns. Then, from every fund that cleared both, we kept the 3 best performers over 3 years in each category. First up, Australian shares, large companies, and this category is tight. The L1 Capital Catalyst Fund takes the top spot at about 13% a year over 3 years. It holds around 10 stocks and takes an activist approach, pushing the companies it owns to unlock value. Dimensional Australian Core Imputation Trust is second, also about 13%. And it is the rules-based option in a category full of stock pickers. Solaris Core Australian Equity is third, at about 12%. Less than 1 point a year separates the 3 of them, which is the opposite of what you are about to see in the small companies. Now the small companies, and these numbers need context. The Australian Small Companies Index returned about 10% a year over the same 3 years. Ophir Opportunities returned about 30%. Ellerston 2050 is second, at about 27%. Firetrail Australian Small Companies is third, at about 22%. All 3 roughly doubled their market, and that is why they are here. Global shares next, and the context matters again. Global shares in Australian dollars returned about 19% a year, so this was already a strong market. Munro Climate Change Leaders still doubled it, at about 39% a year, the highest number in this episode. Global Alpha Extension is second, at about 25%. It is a systematic fund holding more than 400 companies, so a model is doing the choosing, not a stock picker. PM Capital Global Companies is third, at about 24%. And Australian bonds, with one warning. These are not index funds holding government debt. They are active income strategies, and they take real credit risk to get where they got. The Australian Bank Bill Index returned about 4% a year over the same 3 years. Western Asset Enhanced Income leads at about 8%. Pendle Dynamic Income is next, at about 7%. Janus Henderson Tactical Income takes third, at about 6%. Now the fund that got thrown out. Novaport. Smaller companies cleared both gates. Crowns, from FE Fundinfo. 5 stars from Morningstar. Both houses put it in the top 10%. And you cannot buy it, because it is closed to new investment. A rating tells you how a fund has done. It does not tell you whether the door is still open. One more thing before you go looking for these. In Australia, the same fund is often sold to you several different ways, through different platforms and different unit classes, at different fees. Same portfolio, different price. Check which version you are actually being offered. So that is 12 funds that 2 independent rating houses both put in the top 10%, and that then beat the others that did the same. But ratings are a rear-view mirror. Tell you what has already happened. FE Fundinfo rebalances its crowns in August, which means some of these funds are going to lose them. When that happens, we will name them. If this was useful, hit like and subscribe. Which market should we put through the gauntlet next? Tell us in the comments. Thanks for watching, and see you in the next video.